Hey guys, this is Joey here, top tier remisier and chief trainer at Trading Impossible. So I've been looking at some of my trading calls, and one of them is called Yang Zijiang. So I've actually issued a few sell calls for it, I think on January 5th, okay, and on January 7th. So all these kind of shared the public when I have the time. So I think when price was 1.08, I started to issue a call. So you can just go on to Singapore Trading Insights.blogspot.sg to take a look at some of the trading calls. So today I'll just go on to explain, step by step, why was the call issued and why was there a sell entry and things like that. Because I mean, some of my clients have read some of the description, but they're still not sure, why is there entry. So I'll just go through step by step along the way by just looking at the chart, right? So let's just go on, look at the chart right now. Okay, so you can see that for Yang Zijiang, okay, this is the chart for Yang Zijiang, right? And it has been, okay, let's just go through very quickly, how it looked like from 2014 to now. So 2014, it has been rising up, from June to, it hit a high of about May, about 150 in May 2015 and started to come down. So there was quite a huge sell down, below the 140, 138 support level and started to come all the way down, right? And right now what we're seeing is that, okay, it's a bit volatile, up and down, but in general we can see that this is something like a head and shoulder pattern, right? But this is something like head and shoulder pattern. So there's a neckline over here, it's a shoulder head, right? So it kind of broke down below this support level, so you can see the trend started to reverse and was quite a huge sell down all the way to August 2015, and then we saw a rebound, right? But generally you can see that the moving averages are starting to point down. So the 20-day moving average has crossed below the 100 days moving average and the 200 days moving average, right? And all this while the prices are still below the longer term moving average. So even for this time, it touched in October, it touched the 100 days moving average and started to come down. So let's just draw a few support lines to gauge levels, right? So we can see that, okay, there's probably one support around here, that's $1, okay, and there is a support around here at about 105, okay. So let me scroll down. Okay, you can see that 105. Yes, so 105 is a support. You can see that at this point in time, what is 1.05? At this level is 1.05. $1 is definitely a support. You can see this was the initial resistance it broke out from. Okay, here it touched $1, rebounded. $1 near it, rebounded. So currently what we're seeing is that on the 5th of January, okay, somewhere around here, okay, it kind of traded in a range of 105 to 110, but it was unable to cross, back above that 110 to 114, 113 level, and it's still hovering below that 100 days moving average. So the trend was still down because it was not able to break above the resistance. You can see that it's actually forming lower highs, and the 20-day moving average is sloping downwards. So this is a sign of a short-term downtrend, right? So I actually issued a call, to be cautious, if the 1.05. So you can see that the low here was at 1.05. It just rebounded briefly in December, and I issued a call that it might be a breakdown below that 105, and it did happen about 1 or 2 days later on the 7th of January. Okay, so once the 105 breakdown, we could see sellers start to come in. So that was when I issued a call again. And the next support, obviously, when it break the 105, it actually went down to $1. So that was our first target at $1. Right over here, you can see that $1 was the support in May 2014. It touched here. It almost touched, but it rebounded, right? So this $1 is a very crucial psychological level, right? So it kind of headed back to $1. So what we can expect is whenever we see a breakdown, especially on strong volume with all the trend pointing down, we can safely say that with this downward breakdown and a downtrend in place, it is safer it's safer to ride the downside. So but we have to take note of the next support level, whereby we can cover back our shorts, or for those who have not shorted, they want to buy along the next support, right? So the next support is at $1. So if you're shorted at 104, 103.5, it's not much. It's just about 2 to 3 to 4 cents range, so we can probably cover back at $1, right? But it started to consolidate, from $1 for a few days, okay, and I did send out an email to be prepared in case it broke below that $1. And yes, on the 13th of January, it did break below that $1 mark. So this is a very crucial level to take note, because normally when we're looking at psychological levels like $1, 50 cents, $2, $10 and things like that, so these are all psychological levels. So once it breaks below, I actually saw quite a heavy selling, in terms of sellers just really throwing down at the buyers. So I did send out a note to some of my clients. And yes, the next support we will take note is, what was the next level. So probably you can see in August 2013, okay, probably somewhere at about 0.90 cents. Yep, somewhere at 90 cents. So we can probably go on to 90 cents. So yes, $1 to 90 cents. And we started to see some heavy sell down very quickly over the next few days, right? And I expected it to actually rebound, and from the 90 cents, probably 91 or 905 started to rebound, but the market turned down, and oil and gas counters were dragged down further by falling oil prices, and it just broke below the 90 cents level, right? So currently what we are saying is that if the 90 cents don't hold, we can actually hit to a low of about 80 cents, which was the support in June 2013. So that is the next support level. So I would say that if it stays below 90 cents, tomorrow, the next few days, like what we're seeing, it closed at 0.88 today. So it is still weak in the short term. But if the 90 cents were to break above that 905 to 90 cents, okay, we might start to see a rebound back to probably 96 to 95 level first. Okay, but currently what we're seeing is that if it stays below 90 cents, we've got to be careful, because it seems like it's heading towards the 80 cents. So you can see that for this chart, there are no indicators at the bottom, just the volume and just very simple moving averages just to get the trend, right? So we're just looking at price action, looking at support and resistance level to kind of get our trading range and time our entry and exit. So that's why I actually made certain calls for sell calls for Yang Zhejiang. So I hope you have learned something in this video in terms of why we should get out if any key support levels are broken, or maybe even have a CFD sell position lock in to ride the downside like what we have done, right? So I'll talk to you in another video. Thank you.